Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
As it was, we kind of broke out to the upside early in the year again, and we just, right at the end of February, as a matter of fact, when I did the last webinar, that was the weekly breakout candle. So we had this 100 resistance here we had to be careful of. It used to be support in the past. We had some more resistance above there at 105 and some more above at 113. So you're pretty much looking at the picture. Let me see here. You're pretty much looking at the same picture if I get to this point. There it is. This is the daily chart from over the weekend. You manage to be trading now between the resistance at 100 and the support at 94. So once this happens, this is one of those strategies again too where very, very hard to make money depending on where you're selling. If you're a seller, what I would suggest is sell outside of this support range at the bottom, sell puts below here, sell calls above here, above this this nice support level. I think I have it on the next slide. It could do one of these numbers. It could hit this resistance, hit this support here, hit resistance here, maybe go down and test this support here, and then rally back up to this resistance. In other words, the dollar versus the yen could probably be range bound for a long, long time. And this is a really popular strategy in the S&P 500. There's a lot of guys that are doing this. They're selling calls and puts way, way out, and there's a lot of money in it. As a matter of fact, one of the premier funds that does this is Ace Investment Strategies. This has been Yudi Chang's strategy for years and years. Just make sure you cover yourself with any of this stuff, right? If you sell the puts below 90, make sure you buy puts for protection. If you sell the calls above 102, buy some calls above 102. With the economies as weak as they are, and both of them being low yielders, if there is any kind of carry trade again, they're probably going to do the same thing. They're probably going to use the dollar and the yen again because of the low interest rates that they have. Last thing I want to show you guys today, this is actually a situation that happened this morning. Notice the headline at 3:30 Central Time here. This is actually, I believe, I want to say 8:30 in London, based on the time of the year it is. This is when the economic data gets released, and I'm usually around when it happens. We had UK May 2009 manufacturing production month over month. The forecast was plus 0.1%, but it came in at minus 0.5%, which is bad news for the British pound, right? And the UK industrial production came in at minus 0.6% versus a forecast of plus 0.2%. So this is a 240 chart of the spot pound because the FX options, the ISE indexes are still closed at this time of the morning. So notice that 4-hour candle is resting right here in the support area at the time that this economic data gets released. Now you would think that the news is bad, everything is inviting you in to take a trade to go short, right? But if you did take a trade to go short, that 4-hour candle made a new low by a few pips and then ended up actually closing up here just above 162. And the next 4-hour candle rallies right up to this pocket I marked off as resistance, okay? And the next chart shows as soon as we hit that pocket of resistance, that candle closed here as a green candle. So anybody buying the two higher lows here thinking that they're getting a chance to join a new uptrend, we came right back down to the support level, and I don't know where we ended up on the British pound today, but versus the dollar. But that's how people get trapped, folks. That's how you lose money. If you don't look at where the origin of these moves are, up and down, and you're buying after a move up in price and into a resistance, or buying after a move down in price and into something like this, you're probably going to lose. And you know, that, my friends, is the presentation for today. It went a little bit longer than I thought it would, but thanks for hanging around for it. And if you have any questions, I haven't been really watching the chat, unfortunately. Sorry.
That's okay, Steve. I've been watching it. Let's just take a couple. First of all, I just want to say thank you. You did a great job. I really liked the sort of the three different time frames. And you looked way back, then more recently, and then just current to show everybody different time frames. And way back when I was learning to trade, that's what somebody taught me, is that you should look at different time frames to get a real good perspective. So I really appreciated that, and a lot of great information. So thanks again for sharing it with us. You did a great job.
You know what? It's you were, again, I say this every time I come here, guys. You were somebody who gave me a chance. One of my very, very first ever presentations, and I can't thank you enough for the opportunity, because I really look forward to coming here and spending a little time and kind of updating where we think our dollar is going. Hopefully, much higher for our sake, I guess.
Yeah, well, hopefully, but we'll see how it all plays out. And like you said, you have to keep an open mind, and options give you the ability, whether you're selling them or buying them, you can always spread them, especially if you're a seller. You really, as you said, you can sell options, but you're going to want to buy something down below if you're, a put seller, or above if you're a call seller, because you got to watch out.
Yeah, for sure. Oh, yeah, you got it for sure.
Yeah, I got some questions here. The first question is, which I guess is a question from me. Which brokers can trade the yuck? Just about any broker can trade these options. So you want to ask your broker, but whether it's Options Express, it's E-Trade, it's Trade King, Interactive Brokers, they're all taking the ISEFX options. So Thinkorswim, TD Ameritrade, the list goes on and on and on. So if you have an account with any of those guys, or if you're unsure, you could always send me an email at smeisinger@ise.com if you're having trouble accessing it. Let me see if we have... I saw a question before. I don't know the exact words, but essentially is, Steve, how do you know when you're wrong? You're trying to buy a support. In fact, I loved your last point. There's another thing that I learned way back when, is that I used to call it the 3-time rule. The first time, is a good time to either sell or buy based on support or resistance. Second time and then third time gets even more dangerous. And I really never heard anybody else saying that, except that was just my thought, that each time gets a little more dangerous. What do you do? How do you look out for those breakdowns? Those, the breakdowns where you thought there was support, or breakouts when you thought there was resistance. How do you guard against that?
Well, the easiest way to do it, first of all, is mechanically, which is what we really try to do. As soon as price breaks out of one of those channels to the upside or the downside, as a rule, what I like to do is wherever the origin of the breakout was, the original origin, so maybe the highest high of the last 5 bars or 10 bars, whatever, that would be a great place to look for an entry on some kind of a pullback. And of course, right below that congestion area before the breakout is a pivot low, and if you're wrong, you're going to make a new low below that pivot low, and that's going to tell you that the market says, you know what, I'm going lower. So that's pretty much is a mechanical way as I can. So if I have an up, sideways, and down, I kind of look to enter where the first candle closes below those lows. I kind of look to enter the trade at those lows with a stop loss above the highest high of the channel, and just reverse for the support area on the bottom. I put my stop loss below the lowest low of the channel, and if it wants to go lower, it's probably going to go lower in search of more buy orders, and it's probably going to drop a long way. So no sense fighting it.
Understood.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.